The S&P 500 is reported to be 20% higher than the October 2022 low, but before you go and start throwing money at ETFs like VOO, SPY, and IVV, you should know a few things that I'm going to share in this video so that you can be better prepared and educated on your investing journey. So the S&P 500 is one of our three major, most widely followed indices in the US, the other two being the NASDAQ Composite and the Dow Jones Industrial Average. The S&P 500 index is market cap weighted, meaning more weight or more of each of your dollar that you invest into ETFs and index funds that track the S&P 500 will go to the larger companies that make up that index. It's actually very interesting that the top 10 companies in the index make up about 30% of that index. So when you're investing in S&P 500 based index funds or ETFs, just know that the majority of your money, 30% of what you're investing, is going to be going to the top 10 companies that index fund holds. However, you should know that about half of the companies in the S&P 500 are not actually doing that well. The top half, more like 270 companies, are performing well year to date in 2023, with a couple companies actually having returns above 100% and many above 20%. The average performance of the companies with positive returns is 16.37% as of recording this video. But for the remaining 230 companies that have negative returns, the average return is negative 10.84%. And an interesting number to look at is the median performance of these companies in this S&P 500 index, which is 1.58% as of recording this video. Now that is significantly lower than the 12.68, 12.7% year-to-date performance that the S&P 500 index market cap weighted is performing. So that just goes to show you that yes, there are a significant number of companies that are not performing well, and this is what you're going to see a lot of people point to when they say that a recession is looming and the stock market crash is about to happen. So when you take all of these factors into consideration, what does that mean for everyday investors like you and me? Well, for me personally, I can tell you that it means nothing really. I usually tune out the doom and gloom YouTube videos that you'll see, the headlines and mainstream media that tell you to sell, 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 or buy in certain times of the stock market. And that's been a big factor in helping me continue to build wealth and see my investment portfolio made up of index funds and ETFs grow the way it has over the last 13 years. I also don't expect every company in the S&P 500, let alone the US stock market, to have positive returns at the same time. You should know that the S&P 500 index is made up of different companies from different industries. If you take a look at the sector breakdown of the S&P 500 index, you will see that information technology makes up 28%, healthcare 13.7%, financials 12.5%, consumer discretionary 10.2%, communication services 8.8%, and so on and so on. So the big question for some of you is whether or not you believe the S&P 500 will continue to climb, and the truthful answer is no one knows. What I think most of us do agree on is that we all should be investing to build wealth, to create that nest egg, to be able to retire on, whether it's in 10 years, early retirement, or later on in life. And the video on the screen will teach you about the 4 stages to becoming a millionaire. Click on it and I'll see you over there. Peace.